about another value that's really important, especially when you're doing fundamental analysis on a company or a group of companies, and that's the operating margin. And we've already talked about the gross margin, uh, which really gets into, can I make a product? Uh, am I going to have enough room so that I can then maybe sell it later on? And if we can, if it's positive, obviously that's a good thing. Now, obviously, we want, it depends on how much of a margin there is for the gross to really take that next step. So, and that's where we actually then get into the operating margin. And so let's see how we first calculate that. So the operating margin is based on the operating income divided by revenue. And to get to the operating income, you have to take revenue. And obviously, you have to subtract the cost of goods sold, and that's how you get to the gross margin if you just looked at revenue and cost of goods sold. But if you then subtract the SG&A, okay, sales, uh, general and administrative expenses, and then you have research and development that you then subtract from that too, from the revenue, and then marketing and other operating expenses, you get to the operational income. And then obviously you take that and divide it by revenue and you get the operational margin. And here's a good, really, really great way of looking at gross margin versus operating margin. Gross margin answers the question, can a company produce profitably? Whereas operational margin answers, can the company run the entire business efficiently to make a profit by having all the subsequent things that you need to do to actually sell a product? Can you then make a profit out of it? And can you actually run it over several quarters, not just one, and be able to actually grow your business and hopefully expand maybe on the margin to really become even more profitable. So that's what it's really answering. It's about the operation. Can I really run this business and sell my products and service my products so that I can actually make money in the end? And so it's one thing to build it, it's another thing to then sell it and everything that goes around actually, running the business to actually have a business where you actually are actually making money out of actually selling and maintaining a product line, let's say. So that's the key to it. And again, that's just an example. We're not going to run through it. I don't think it's not that hard. As long as you have, I mean, these are actually in all the quarterly statements, you can go in there and get this information. And then the last thing that I did want to cover is actually, if you look at the different industries, they all have different ranges of where the operational margins could be at. Obviously, for technology companies, they're usually higher, especially in software, because again, they don't usually have a whole lot of cost of goods sold, but from the selling standpoint, there's usually a lot more there because to sell some of their solutions, it takes a lot of people and takes a lot of smart people actually sometimes to really to really go out there and guide and consult with businesses and individuals to really get to buy their products and really understand their products. Pharmaceuticals, again, also very high margins. Utilities, relatively, I mean, midway, I'd say. Um, and then you have industrials and retail usually on the lower end, even airlines on the lower end. And that's really it. This is more of an example between two companies that say Walmart and Microsoft. But again, the key is to actually do this over several periods, not just one quarter. And you want to be able to compare it against peers, companies' peers. Because if you can see a difference, if one is stronger than the other, then that's probably a better company ultimately. But you have to look at it over time because who knows? Maybe the company's going through a change and maybe they just slightly dropped on their margins, but they could be picking it back up in the very near future. So those are things, again, that's all part of the analysis. But again, this is a very, very powerful value that, again, I use a lot of it, especially on my fundamental analysis, and everybody should be looking at it. Thank you. And we'll again.